In just 24 hours, almost $20 billion vanished from the crypto markets, liquidated in one of the fastest, most violent flushes we've seen in years. It was brutal. It was dramatic. And for many people, it was terrifying. But the truth is, this wasn't the end of the bull market. In my view, it was the cleansing before the real rally begins. Let's be clear about what actually happened. The whole thing started with a headline: Trump announcing 100% tariffs on China. That single statement created a moment of uncertainty across all risk assets. Stocks pulled back, commodity markets flinched, and crypto dipped. But that headline was just the spark. What followed wasn't driven by panic, it was driven by mechanics. The market was overloaded with leverage, positioned too aggressively, especially on longs. Liquidity was thin. And worst of all, it happened on a Friday night, historically one of the weakest points for market depth. When stops began getting triggered, it turned into a reflex chain reaction. Bots didn't ask questions, they executed. One liquidation triggered the next, and within minutes, a controlled pullback turned into an avalanche. Altcoins with shallow order books didn't just fall, they collapsed. Some dropped 70, 80, even 90% in mere minutes, only to instantly bounce back. That is not natural retail selling. That is forced selling. That is automated liquidation. That is a structural reset. Now, people online are busy arguing, was it manipulation? Was it an attack? Was it Trump? Was it whales? Honestly, it doesn't matter, because whether Trump intentionally caused it or someone simply used the headlines to trigger liquidations on purpose, the outcome is the same. Excess leverage is gone, weak hands are flushed, and the market is cleaner, healthier, and more primed for upside than it was before the crash. And here's the key. Moments like this, where price disconnects from reality for a very short window, do not come often. They are brutal, they are fast, and they are unfair. But they also offer something that steady green candles never do: asymmetry. A moment where risk briefly becomes tiny while upside remains enormous. I didn't panic. I didn't freeze. I had been expecting a correction in Bitcoin for weeks, even though I didn't know when or how it would come. And when it finally arrived, sharper than expected, my strategy didn't change. I used the strength of Bitcoin to exit early, and I used that liquidity to rotate into altcoins at major discounts. My current outlook on Bitcoin is unchanged. I expect a midterm move back into the $69,800 to $82,600 range, but I do not expect Bitcoin to explode vertically in the short term. In fact, I believe Bitcoin may now enter a slow, grinding phase that could last up to a year. Not a deep crash, but a sideways to down consolidation. And during that time, capital will quietly rotate from Bitcoin into midcaps and altcoins. That is historically how crypto cycles operate. Bitcoin leads, then stalls, then altcoins run with the liquidity. So I'm not betting on Bitcoin doubling from here immediately. I'm using Bitcoin as a liquidity engine to fuel the next rotation. Long term, I am still firmly bullish. Over the next 3+ years, I see Bitcoin reaching between $190,000 and $256,000. Maybe more, but that's my realistic base case. Now, let's talk about Ethereum, because ETH handled this reset in a way that actually impressed me. Yes, it dropped as expected during the liquidation cascade, but what stood out to me was how fast it recovered with strength. That tells me institutional buyers in whales were waiting for this opportunity. My current midterm target remains between $3,100 and $4,100. From where we are now, ETH has the momentum for a clean double heading towards $6,300 to $8,500 in the next phase. That's why I'm not selling my ETH. I'm holding. And for the peak of the upcoming altcoin cycle, my long-term target sits between $12,900 and $14,600, with the potential for an overshoot if dominance shifts aggressively in favor of smart contract platforms. But the real star of this sell-off for me was Solana, because Solana didn't just dip randomly. It fell exactly into my buy zone between $161 and $176, and I bought confidently. If you weren't prepared or missed that level, don't chase it. There is likely one more pullback ahead, and my secondary accumulation zone sits between $128 and $155. I believe Solana will reclaim $255 fairly quickly once the post-liquidation dust settles in. And when Solana trades firmly above $255, that's when altcoin season officially begins. From there, I'm targeting a move toward $426 to $486 in the midterm, and by the peak of the altcoin cycle, I believe Solana reaches at least $613 to $772, with the potential for an overshoot if dominance shifts aggressively in favor of smart contract platforms. So let me leave you with this. Most traders right now are still staring at charts in disbelief, trying to process what happened. But I'm not stuck in shock. I see structure. I see rotation. I see opportunity. This wasn't a market breakdown, it was a purge. It was the washing machine cycle before the clothes come out clean. Gold is at all-time highs. Stocks are at all-time highs. Macro conditions are still risk on. As long as that remains true, the crypto bull trend is not broken. It was simply rebalanced. Fear is temporary. Conviction is rewarded. And last Friday, courage was paid in full.